The world's biggest oil lifeline is burning. Not literally, but financially, strategically, and structurally. And this time, the warning didn't come from a sudden price spike or a headline war. It came from something far more dangerous, a silent shift in how oil is produced, priced, and controlled. The global oil market has just entered its most dangerous phase. And almost nobody realizes how close we are to a massive disruption. Because for decades, oil has been the backbone of global power. It fuels economies, it drives militaries, it determines alliances. But most importantly, it underpins the financial system itself, the dollar, trade, global stability, all connected to oil. And now, that entire structure is under pressure. Here's the trigger: a series of small, calculated moves happening across multiple regions at the same time. Production cuts, supply chain disruptions, strategic reserves being drained, and new alliances forming outside traditional systems. Each move on its own seems manageable, but together, they create something much bigger: a system under stress. Think about this. A $20,000 drone can now threaten a multi-billion-dollar oil facility. A single disruption in a key shipping route can impact millions of barrels per day. That's the new reality. The oil market is no longer just about supply and demand. It's about vulnerability, and that vulnerability is growing. Now let's go deeper. Global oil supply is tighter than it appears. Official numbers suggest stability. But beneath that, spare capacity is limited. Much of it concentrated in a few regions. Regions that are increasingly unstable. At the same time, demand hasn't disappeared. Despite economic slowdowns, global consumption remains high. Emerging economies continue to grow. Energy needs continue to rise. This creates a fragile balance. Small disruptions can have massive impacts. Now add geopolitics into the equation. Key oil-producing regions are facing rising tensions. Trade routes are becoming contested. Strategic choke points like narrow shipping lanes are under constant risk. This is where things get dangerous. Because oil doesn't just move through pipelines, it moves through geopolitics. And when geopolitics becomes unstable, supply becomes unpredictable. Now look at pricing. Oil is not just a commodity, it's a financial instrument, traded globally, priced in dollars, used as collateral. This means volatility in oil markets doesn't stay contained. It spreads into currencies, into inflation, into global markets. This is the hidden connection. Because when oil prices spike, inflation rises. When inflation rises, central banks react. When central banks react, liquidity tightens. And when liquidity tightens, markets begin to break. This is the chain reaction. Now here's the contrast that most people don't see. On the surface, the oil market appears controlled. Major producers coordinate output. Strategic reserves exist. Markets adjust. But underneath, the system is becoming more fragile. Production is increasingly concentrated. Spare capacity is limited. Infrastructure is exposed. This is not strength, this is vulnerability. And vulnerability is what leads to crisis. Now let's connect this to history, because this isn't the first time oil has triggered global shifts. In the 1970s, oil shocks reshaped the global economy. Prices surged, inflation exploded. Entire economies were destabilized. But something else happened. The petrodollar system was born. Oil was priced in dollars, demand for dollars increased, and the United States gained unprecedented financial power. That system has defined global finance ever since. But now, that system is being challenged. Countries are exploring alternative pricing mechanisms. Some are settling oil trades in other currencies. Others are building parallel systems. This is not just an energy shift. This is a financial shift. Because if oil moves away from the dollar, the entire financial structure changes. Now go even further back. Empires have always depended on energy. Rome depended on grain, Britain on coal, the United States on oil. Control the resource, control the system. But when control weakens, power shifts. This is the pattern, and right now we are seeing early signs of that shift. Now let's talk about the hidden forces driving this phase. The first is resource concentration. A small number of regions control a large portion of global oil supply. This creates leverage, strategic leverage, and in times of tension, that leverage is used. The second is financial dependence. Oil is tied to the dollar, to global trade, to debt markets. This means disruptions in oil don't just affect energy, they affect everything. The third is technological asymmetry. New technologies, drones, cyber attacks, precision targeting are changing the risk landscape. Expensive infrastructure can now be disrupted by relatively low-cost tools. This is the David versus Goliath dynamic, and it changes everything. Now combine these forces: geopolitical tension, financial dependence, technological disruption, and you get a system entering its most dangerous phase, not collapsing yet, but increasingly unstable. Now let's look forward. In the next 24 to 72 hours, markets will react to headlines, supply updates, Political developments. Oil prices may fluctuate, volatility may increase, but the deeper shift will continue, because the underlying issues are not temporary, they are structural. In the longer term, the implications are massive. A more volatile oil market means more volatile inflation. More volatile inflation means more aggressive central bank policies. And that creates pressure across the entire financial system. This is how energy markets trigger financial crises. Not directly, but through a chain reaction. Now consider the geopolitical fallout. As oil becomes more strategic, competition intensifies, alliances shift, conflicts emerge, because energy security becomes national security. And in times of scarcity, nations act. This adds another layer of risk, because now the system is not just financial, it's political, and political systems are unpredictable. So here's the final warning. The oil market entering its most dangerous phase is not just about energy. It's about the entire global system, because oil is the foundation, the lifeline. And when the lifeline becomes unstable, everything connected to it is at risk. History shows us what happens next. Periods of energy instability often precede major global shifts. Economic crises, political realignments, even conflicts. The system doesn't break immediately. It strains, then it shifts, then it resets. The only question is this: are we witnessing the early stages of that shift, or standing right at the edge of a global reset that will redefine power, money, and stability for decades to come?